One of the real questions has been what's happening in our economy in terms of real food prices, what you are actually paying. And is there evidence of collusion? If you're paying more, is someone else making a bigger profit, and why? I should point out, by the way, that the United Nations said food prices around the world have gone up by around 20%. Here, food price inflation probably just over 10%, depending on which figure you look at. At the same time, the four biggest international global food trading companies, they're based in Europe, are expected to make the biggest profits they've ever made this year through trading in grain. James Hodge is the Chief Economist at the Competition Commission. James, good afternoon to you. You've been looking at food prices here. Is there evidence at this stage of what you would call anti-competitive behavior, people making bigger profits than they should be?
So at the moment, we've detected that margins have gone up for processors in sunflower seed oils. Your cooking oils, which have seen some of the biggest increases. There's also a slightly bigger retail spread we're seeing over the last few years in bread. And maize meal, we have limited evidence at the moment, but there is a tendency for the margin or the spread between what maize costs and what is sold on the retail shop shelf has grown a little bit as well, but that is a closer tracking. But in contrast, on your fruit veg, that's been pretty flat and is probably what is keeping our inflation down at the moment.
You're going to have to explain some of those terms to me. You talk about the retail spread when it comes to bread. Do you mean that in some places bread is more expensive than in others?
So what we look at in order to see whether firms in the value chain or processors or retailers have put up prices more than their costs have increased, so their margins are expanding, is we look at what they buy it for and what they sell it for. And Stats SA keeps track under their statistics, the producer price and the retail price or consumer price. And we can also track that against the actual cost of the commodity, maize, wheat, sunflower seeds that are sold on your major futures exchanges. So we look at those indicators and see whether margins are increasing for the processor, for the retailer in these basic commodities. And that's how we sort of seek to understand whether there's been, we've called it opportunistic behavior, but globally there's this concern that high levels of concentration in food markets has meant that when you have some food inflation and it's expected, firms are able to push through much higher prices than their costs are increasing because there isn't that transparency of their costs. So that's what we mean by spreads or margins for retailers or for processors.
What are you seeing happening with bread? And if we can just focus on that for a moment. It seems, if I've understood your release correctly, that some quite interesting things are happening, that retailers are actually absorbing some of the price increases. They're making less per loaf of bread sold to try and keep the price the same.
So in bread, that's not the case. That's the case in sunflower. So in sunflower, what we see is that the wholesale price, so what's coming out of the refiners in South Africa, has gone up about 72% this year, whereas retail prices are only 41%. So there we see retailers are seemingly absorbing some of those costs and trying to keep the price lower for consumers. In contrast, the processors, we're seeing their margins expanding quite rapidly. Now, we may expect some fuel or energy cost increases, but it looks a bit large to account for that, and that's why we're concerned. In bread, in contrast, though, what we saw is the, let's say, call it the retail markup. So how much it costs them, what they add, and what they sell it to. That markup was around 2 Rand in 2019. It's now edging to 5 Rand. So that's a big increase in spread. And where we see that increase happening is really been where the cost has gone down from the bread companies that hasn't been passed on to consumers by the retailers. So that's why we're seeing a mix across these different commodities. But these are your high price inflation commodities driving food inflation at the moment.
I mean, this is classically what happens. We all know this. Prices go up very suddenly, but they come down very slowly.
Yes, and that's, known in our economist circles as the rocket and feather effect. But globally, there's been a lot of attention to this, and in fact, whilst people understand that there are fundamental drivers of food inflation at the moment, this is probably exacerbating inflation and should be acted upon in order to bring that relief, because consumers, as we know from the national strike today, workers, consumers are suffering immensely under this inflation where wages don't keep up with it.
The situation regarding sunflower oil, and I remember at the start of Russia's invasion of Ukraine, the price of sunflower oil on international markets went up, I think, by 70%. It took a little while, but it did come down. What's that doing to our retail prices? And there's a sort of sub-question there. When you have prices that are so volatile, does that create opportunities for people to make profits?
Yes, so funny enough, our futures exchange for sunflower seed has not seen those sort of increases at the moment. And why we are probably a lower food inflation country compared to many others is because we have a large agricultural sector. But because everyone is expecting cooking oil prices to go up, that may be the umbrella under which some of the processors or retailers could push up prices higher than they should, and take advantage of that situation. So really, it's often a concentrated market in an inflationary environment, which provides those opportunities for firms to take advantage. Many don't, and as we indicated earlier, there may be, for some of the retailers, in fact, they're absorbing a lot of the cost to take that shock. But as we've seen prices go up, and you indicated coming down, that's the so-called feather, slow to come down. We need to keep checking that when costs do come down, they are passed on as quickly as possible to consumers to relieve that pressure, because that's equally offensive, I think, to consumers and workers.
In the end, what I suppose we would need, you're the competition economist, not me, but what we may need is to make sure there's proper competition in the market. And we saw, for example, during the hard lockdown, when people couldn't shop around between the four main supermarkets, that they ended up spending more for food than they would have. They also couldn't go to fresh produce markets. They couldn't stop on the side of the road and buy tomatoes, which also had an impact on pricing. Mm-hmm. So the longer-term question then is, how do we make sure that our food prices are more competitive? How do we make sure that there's more competition in the market?
That's a good question, and our concentration report we put out end of last year focused a lot on agricultural markets, and I think for two reasons. One is it is immensely concentrated and almost unusually so, despite the fact we are a country with a real comparative advantage in agriculture, and there could be a much more competitive space with much more participation. And the second is the fact that small farmers are basically excluded, and so are concerned that as we engage in land reform and try to create jobs in the agricultural value chain, we may not be able to do so. So we have given a lot of focus to that, and our next inquiry is into fresh produce and the whole value chain there and what we've seen. But it is a priority sector for us, and one where we have to look at ways in which we can change the level of concentration in the market to get more competition. In the meantime, what we can do and what we have done in this case is initiate an investigation. We have just cause to do so, and we can then get the actual costs and actual prices of individual companies, and we don't have to use public statistics to determine whether we think they're doing this or not. We can use their actual costs and prices, and if we find they have abused that position, we can prosecute, and that at least has the deterrent effect in the short run. And maybe retailers and others should also be well advised at this stage not to abuse the situation, and also to their own suppliers to question when prices go up whether it is really justified or not.
James Hodge, thank you very much indeed. Chief Economist at the Competition Commission, watching food prices very closely.